Hey, welcome everybody. Let's get going here. So we're changing up a little bit, more focused on what's happening right now in the markets. We'll still apply all of our concepts that we review each week, but I'll give you the typical overview that we do and where we're headed here. So let's do that. So what is it about here today? Well, like we always do, an objective interpretation of what's happening on whatever we're looking at. So what we're going to be doing here is looking at the current market environment, what's happening in the broader markets, what's happening in different sectors, and from there, what stocks might be moving that we could take advantage of. And what we do, always have done, is what we call a techno-fundamental approach, meaning what's happening the broader markets, technical analysis. And from there, one of the things that you find out, like you look at the broader markets, and they do influence what most stocks are doing. That's a given. So why we focus on that. Then from there, you find out that there are money flows where money rotates from one sector to another sector. One outperforms another. There are those that certainly underperform. And then we look at market internal gauges. And there are lots of market internal gauges out there. And, there was a time years ago where I probably used to look at least 20 of them. And over time, I think what most of us find out, whether it's market internal gauges or how you look at the markets, you begin to narrow that down to something that's workable, especially for an individual. Like if you had a team of analysts, and which we don't, but some could be looking at one thing versus another, and you can compare notes. But as an individual, you narrow things down. And what I found was that looking at market internals, you have to separate end of day and intraday. They do come together in certain times, but not at times to totally keep them separate, like an NYSE tick, just keep it out of your end of day analysis. But it really comes down to sentiment and breadth. What is breadth? Well, to what level are stocks participating? Um, what we saw a lot over the last couple of years was the Magnificent Seven, and they're moving the market, big cap stocks, and that shifted. And what we need as traders and investors is that objective way of doing that analysis so that we don't get caught up in the past. Because that's easy to do, especially when we create an opinion about what is. So again, we look at stocks. If we can incorporate options, if there's liquidity and how things are developed, how to take advantage of it. And then there's news, which, wow, the last, I guess, year and even yesterday, what news and on a week-to-week basis we're going to see in these, well, not week to week because we're doing them every other week unless it's around holiday time, these MT lives. But you could see the news that's affecting the markets in that big gap down yesterday. And so we're going to look at what's happening now with Trump's comments at Davos. Oh, now he's not going to use force for Greenland and the markets go up. Well, how do we put that in the context of what happened yesterday and what happened over the last week and month or so to objectively look at what's happening? And you'll see we're going to look at multiple time frames and sectors. And this is the approach and how we're going to review this. So we always look at this slide, meaning what is Master Trader about? How do we look at things? Well, all of these concepts come together to how we form strategies. And of them by themselves, they're just one pieces of information that are missing vast amounts of information. For example, we look at, price is king. Okay, fine. How are you going to look at it? In a candlestick format. Why? Because it just creates pictures. that are easy to see, bar by bar analysis. We looked at this, and if you're new to MT Live, some of these things may be new to you, but look, we're going to look at charts and we're going to apply bar by bar analysis in whatever we look at. Trend analysis, of course, multiple time frames, putting that together, support, resistance, relative strength and weakness. That comes back to our sector rotation, volume, which we say is secondary, and many make a big deal about volume. And while it's really of value, to some value, primarily what you find is when their volume spikes, there's a lot of activity. Because when there's a lot of activity, it draws more and more traders and institutions' attention to something. So other than that, lower volume, okay, but that doesn't really help us make decisions. Prices do. And broader markets and trends, we're going to be talking about that in a moment. I already told you about market internals and intermarket analysis. We'll look at intermarket analysis today, not so much on market internals. And money management and trader psychology, those are other conversations. We'll talk about it a little bit in each MT Live, but this money management part is really the key to success here. And what does that mean, your success? Well, if you're starting out, and even if you've been doing this for a few years, it's about survival in the markets as you're going through a learning process. Not to lose all your money when you're on the cusp of getting it, so to speak, because many that are here, you've probably been in other webinars. There are others going on probably right now. And so as you look at different webinars, this is how I do it. You sift through that information and try and figure it all out on your own to what makes sense to you, right? And as it says, one concept doesn't make a strategy. It doesn't. But when I say we, because we all do this, we all get caught up in the candlestick analysis, and then we come to find out that it isn't the holy grail either. So techno-fundamentals, I've already explained in part of this to you, but I look at it as it shows there a three-legged stool. And when I started out, it was all about the technicals as well. And really beginning to look at fundamentals, and it was like scratching my head. It's like, man, this is not for me. The PE ratios and all of that. And there's some value in that. But look, as I evolved and start learning about trading and investing and charting and stuff and looking at many, many trades, it's like, this one looked just like that one. And so it seemed to me. And then there are many attributes and that you could look at as to what makes one chart versus different than another. We discussed this in part in the green room yesterday. We have lots of discussions. And what I found was, and looking at that, why didn't this one work? Well, the broader markets had a big influence, or the sector had a big influence, and maybe the markets had already moved up. And now I was looking at something that was a breakout, and it was a laggard, and the breakout failed. So there are these other pieces of information that we can put together to put the odds in our favor. Money flows, intermarket analysis, market internals, which have been an excellent guide for us over the years for determining when there's excessive amount of risk. It's increasing. And you may think that the markets have gone up a lot, right, as they have over the last couple of years. And it's like, oh, they have to pull back. And we get this gap down, which was based on news yesterday. But our internals right now are neutral. And so when they reach an extreme, that's when we really know risk is rising. And when things are going down and we start getting caught up in the negative news or whatever it might be, or maybe you're in a losing trade, it didn't go so well, you need something to guide you as to, hey, it's time to switch. Another way of looking at charts versus, the indicator-based methodology is that these are pictures that are created with money. Why does that happen? Well, you and I and the rest of the world come to some belief about what XYZ is going to do, or the broader markets, and then we place trades. And as we do that, it prints on a chart for everyone to see what we are doing as a group. And so as we look at candlesticks and we start grouping them together and apply bar by bar analysis, now we're really getting a handle on things in an objective way. So they continue to provide us with pictures of ongoing expectations. And you can't manipulate that other than to changing a time frame, which can be confusing. Meaning, if I look at something on a monthly chart, I can get a perspective. And if I look at the same stock on a 5-minute chart or a 15-minute chart, I'm going to get a totally different perspective about that. So I have to put together a way of putting all of that information together. Now, this is not what we are at Master Trader. And you could get enamored by charts like this. So I kind of in a funny way, making joke, are you a chart artist? Because it looks pretty fancy with all those colors, and it can be enticing to think that, this is what's required. And we all fall into that trap of thinking this has to be complicated. And I'm not trying to make ease of the fact that it does take quite a bit of time to assimilate any method, but this is not it. This is some very bright person's way of coming up with really the ultimate indicator to put on your chart, called an Ichikumi cloud, that does trend analysis in multiple time frames. It defines support and resistance and where you should take positions and timing of it. And then there's something else on the bottom. Maybe it's a MACD with some kind of signals. And the more stuff you put on there, the deeper you get into the rabbit hole. So we're not indicator salesmen. We're not going to sell you any indicators. That's for sure. And having been down that rabbit hole pretty deep many, many years ago, you can just keep changing settings and so on and so forth. And it's just not a good thing. Now, candlesticks. Well, let's simplify that. And we're going to be looking at a lot of candlesticks in a moment. Big bars and little bars. Hey, what's a big bar? What's a wide range bar? You just look at the chart, and I'm going to show you some. You just look at the chart and you go, that thing is big. And that tells us that there was a big increase in upside momentum or downside momentum. And last I looked, we had some big green bars intraday. And on the daily charts, they were big green turn bars from yesterday. And now I'm looking over there to my right, and I see that the market's falling apart again. And those big green bars are turning into topping tail bars. And this is exactly what's happened today. If you looked at a daily chart, you saw this on the broader markets. And now it's about 12:15, and it looks like this, give or take. And what will it look like at the end of the day? Will it look like this? Or will it go back to looking like this? And the lesson there is, do not make an assumption about the candle conclusion and the time frame you're observing until you're near the end of that time frame. Daily chart, by 3:30, 3:30, you're getting a pretty good idea. If it's green on the day, it's likely to stay green. Red is likely to stay red. And at some point, like now, you can have green bars turning to topping tail bars. And if it gaps up, it could be green, be red. So you really have to have the ability to sit on your hands sometimes and have the discipline not to press the button based on your rules. And they're narrow range bars. And if they're overlapping like this, it's just could be noise, could be that it's going to break out or it's going to break down. And as it says, where this happens is the key, because you have to put these in the context of the trend in multiple time frames. The bottom is momentum is increasing, slowing down, or it's reversing. It's that simple. And it doesn't matter whether I call these bottoming tail bars, or someone else calls them a hammer or an inverted hammer or some dark cloud cover or whatever it is. Bar by bar analysis is going to tell us what's happening in that pattern on that particular stock or that particular market in the time frame that we're looking at. Granted. Now, I put this scan on here. You can scan this with your phone. I think Dan dropped in a link. And so you can, without me talking or about it, you can go there and just read about why Master Trader. A little bit about the company. You can search around there, look what Dan and I are about, how long we've been doing this. You need a trading plan. Without a trading plan, you have no rules. And I like to call it a belief system. What are you basing your beliefs on to place a trade? It's your Kumi cloud? Or as we simply say, is the trend up, down, or sideways? And look to the left. If you're going to be a buyer and it's in an area of support and you've got a bottoming tail candle, the odds are in your favor. That's a great starting point. It's the key to success. You need that trading plan. You need that money management. And this point here, most traders spend very little time in follow-up. That leads to creating a trading journal. And in one of the courses, I think two of the courses, I show you how to do that using Microsoft OneNote. It's a really simple piece of software that's pretty much on everybody's software if you have a Microsoft Office, and you can create a journal in there with good trades, bad trades. And one of the things that you will absolutely find out once you start building a history of that, what you're doing right and what you're doing wrong. You might find out that you're buying after, multiple bars up and you're selling on the pullback. And so doing that and keeping a journal, you'll find out what you're doing wrong, and you'll see the ones that are right. This is something Dan and I started just recently. It's just brand new this week. And you can scan that, but we created a channel in Telegram. Now we have other channels that we update our subscribers, but you can go in there and we're going to post trade ideas. Dan comes up with more ideas than any of us could possibly trade. And that's good and it's bad. You can get overwhelmed with it, but there are lots of ideas that are good that we don't put in the letters, because in the letters, we're really doing our best to cherry pick the best of the best. Well, and there are so many lessons that we could talk about, but one of the things that you also discover is that what you think maybe isn't so good, it winds up working out. And I don't have a definitive answer for that other than to be open-minded, because there are a lot of setups that I look at. Somebody might say in the green room, look at that. And I don't want to, if they ask my opinion, I tell them. But if they don't, I don't say anything. And I think to myself, that ain't probably not going to work out too well. And I've seen plenty of things work out real well that I didn't think, or vice versa. So these ideas are things that you can look at on your own, and you'll learn from it. So we're putting some ideas, something of interest, a chart to take a look at. So it's a free service. You don't even have to give an email. You don't have to do anything. Right? There's no charge for it, but we'll share some good information with you. Now, this is what we're getting at here, is that the top down approach. What are the broader markets doing? What are the sectors doing? And then ultimately, we can trade the sectors, the ETFs, but stocks within them. And this is a trend matrix that we share. I put together every weekend, and it's in the ETF letter. But this is something so simple you can do on your own. Is to just look at a trend, and this is a daily trend. Define an uptrend, higher highs and higher lows. There's a weekly uptrend in this example. higher highs and higher lows. These little dots are what we call pivots. Some platforms call them fractals, just a fancy name. And you can set that and just say, hey, show me a bar with 3 higher lows to the left and right. Show me a bar with 3 lower highs to the left and right. Define an uptrend, higher highs and higher lows. Look what happened yesterday. Right? This was today. So here's an example. This was yesterday and this was today. And now this bar doesn't look like this today. I captured that. I captured that before we started. Now it's a topping tail bar, a big with a tail on the top, which would suggest it's going to go down. But we still got time to go in this day. It could go back to looking like this if buyers show up at support. But it violated the pivot low prior to a higher high. So if it looks like this at the end of the week, and this was last week's trend matrix, I'm going to turn this up to sideways. And you can see the NASDAQ is sideways on the daily chart, but it's up on the weekly and the daily. And what that communicates to us is that if I have a monthly and weekly in an uptrend, and this is sideways, it could turn up. And a lot of times what happens is when this is sideways and it turns up, right, it joins the others. And at other times, see communication services, it went from up to sideways. And that often precedes a move to down. Now, we got to go further into the analysis, but with a monthly and weekly time frame in an uptrend, there's a pretty good possibility that this could turn back up again. But where's it going to do that? Well, that's what we have to define by looking at multiple time frames, which is usually going to happen at support. Software has been in a downtrend. And last week, it changed from a sideways trend to a downtrend on the weekly chart. Clearly, that's a negative. And so we continue to do this week by week. And as this changes, like there was, well, some time ago, it was mostly red. So these will change all green. That means these are sectors that are doing well. This is one you better probably stay away from. And none of them are all red. Sometimes they turn all red, which means all time frames are in a downtrend. And what we then do, right, we just continue to monitor that. Maybe the daily flips from down to sideways. That often precedes a turn backing up. And then from there, we would look at our market internal gauges, and that would communicate to us whether it was time to put risk back on. And so this helps us with sector rotation and money flow. What's happening there? Memberships. I just put this in here. You can go check it out. I'm not going to spend a lot of time. So we've got the advisory letter, which encompasses that top-down approach, the weekly options trader, which is weekly options, right? Credit spreads that are going to expire that week, 10 days at max. The ETF trader, which is trading any of these at the appropriate time. And chart of the week, which is a free service. Just get on our interest list and you can go and you can read the old charts of the week. They're on the website. You can go check them out. Right. And you can scan this one for trading education. You go read about that for you to go look at. And from there, we're going to look at what's happening today, which is the essence of why we are here. So what I want to do is first look at the charts. And these are the S&P sector charts. We review these every week. Well, I look at them on a daily basis, maybe not every single one of them, but every week we look at these. You see in the trend matrix in multiple time frames and update that as to what they're doing. And these are live charts right now. Remember I said it was a green bar before we started, and now it's a topping tail bar. And there you can see it. And industrials, topping tail bar. So as we look at these charts, we say, well, that one broke major support. It's no longer in an uptrend. I have to be objective about that. I'm telling you how. Now, as we look at these, say, well, industrials are outperforming. Okay. technology has been underperforming and it's just been this sideways mess. And we did a chart of the week and it's in my blog. Go read our blogs too. Under the navigation panel, it says start here. And there's lots of great information. There's my blog and Dan's blog, and Dan mostly about options, which is all great stuff there. But there's a lot of great education on the site that's free. So one of the I wrote about was the coiling, right? Coiling spring. And this is coiling, and now it's broken to the downside on news. And so as we apply bar by bar analysis, and as I said, you got to make sure that it's near complete done, because this was a green bar. Like 20 minutes ago, a half hour ago, that was a green bar at the high, and now it's a topping tail bar, which is in alignment with yesterday's breakdown. So we're getting confirmation here. And what does that tell us to do? To think lower into tomorrow, assuming it closes like this. If it closes green near the high of the day, it really puts a fly in the ointment of the bearish case. It's still broken down, but if it closes green, what if it goes all the way back up again? It could do that. Markets do crazy stuff. But if it closes like this, it says lower. There's that communication services that last week turned to a sideways trend, breaking down. Energy. There was the Venezuela news. Energy turns around. That's turned to an uptrend. Financials. This is another kind of bearish point for the markets, that financials have broken down after breaking out. So that doesn't look good. This was a green bar. Now it's a topping tail bar. Now materials have been an uptrend, and we cover these every week in the advisory letter and the ETF letter. And I'm mentioning that because this has really been a relatively fruitless sector, if you will. Breaks out, it breaks down, it reverses back up again, but this is definitely turned around. So what's in there? Well, metals, gold, copper, and others. Consumer discretionary. This is another bad sign for the broader markets. Now it gapped down, so far it's holding support, but that was a green bar and now a topping tail, and so on. We do the same thing. These are defensive sectors. Healthcare could be growth. So AI is helping that. It's turning it around, but it's also defensive. And look at the move up in staples. That's like super defensive. Those are things that people need. Real estate turned around. And this was the retailing REITs. These are REITs and they're different ones. The retailing ones, we had one of these in the letters last week. And then there's utilities. And of course, we could look at all of these, which we would do, in multiple time frames. There are all the weekly time frames, and we'd look at the trends and put that together. And I could look, as we could, there are all the monthly time frames. So we form a bias in multiple time frames. So from there, I'm going to show you a different layout. And here, this is a layout that I put together, and we share these with subscribers. Letter subscriber, Green Room subscriber, take a course. If you use this platform, we have no affiliation with this platform, TC2000, but we've used it for decades. And I've created a lot of different layouts that help us find opportunities. So in here, we can find out what's doing well, what's extended, and these columns can be sorted. So if I want to see what's extended, you can see this is sorted here, the little arrow to the downside. Materials are extended. It's got all green check marks. What does that mean? Well, this means that the close is above the 20. This is the last week. So as subscribers look at this, or if you have the layout, and you see that this was red last week, red dot, and now it's green, there was an improvement. Just like all our other concepts, that's not a strategy. That's not a reason for us to do anything. So is it above the 50 MA? Yes. Was it above last week? Yes. Is the 20 above the 50? Yes. Is the 20 pointing up in the close above the 50? Yes. Well, is it above the 200 MA? Yes. It's a good sector. It's short-term extended, but it's in a beautiful uptrend. What does that mean? Buy pullbacks. Well, from there, what do? Well, in this layout, all of the stocks in this sector are in here. And within the list are scans. I can sort this by what's up or down, change on the day, it's above the open, the week, the year. Is it touching the 20 MA? Those are typically good stocks to buy on pullbacks. I could look over here to see if it's an uptrend, but I'm just going to click on this. And it's transitioning. We've been finding a lot of bottoming patterns lately. And what that means is that you've got these stocks that have been underperforming. But this gap down yesterday, when I look at something like this international paper, I remember this being mentioned in the green room within the last couple of weeks because it was bottoming and it was turning up. And now it gaps down yesterday. And you'll often hear me say, well, maybe it was a victim of the market. Either way, it's been damaged, but it can rebuild. It's in a good sector. Possibly with interest rates, which were moving lower, now they're moving up, right? We're not even talking about interest rates here, but we could take a peek at them in a minute, but this was be part of our analysis. Interest rates broke out, and that's a negative for the broader markets on a certain level, but especially for building stocks. But hey, our president has been basically making lots of changes, in some ways killing us in a way with his news that flip-flops back and forth. But some of the good things, the news was not allowing these big institutions to buy individual homes. Maybe they're driving the price up and helping individuals, and those jumped up pretty big. And so in other sectors we could look at, can't look at them all with you today, but there's home builders, and that is part of that matrix that I showed you, the trend analysis, and this flipped up in a big way. Look at the weekly chart, and here we could look, not here focused on intraday, but the monthly's been going sideways for a long time. And so that broke out and it's pulling back. It's holding up relatively well in light of what? Something that goes in the face of it really not doing well. Interest rates popping up significantly as they did yesterday. So they've been bottoming. And this happens either inflation, which has been coming down according to the government, or there's a belief that the economy is going to grow. And there's some numbers coming out tomorrow. I think GDP is one of the numbers coming out tomorrow, and it's going to be of great interest to see if that goes up. So interest rates can go up, which can put a negative influence on the market, but it could also be a positive for the right reason. And this is part of what we do in the advisory letter, is to go through all of this information and share it with you to make intelligent decisions as to what's affecting the broader markets and where's money flowing into and out of, which could also lead us to, again, the transports. And look at the transports. That's live today. That didn't turn into a topping tail bar like the others did. And so you can see there are stocks in here as this flips around. And this has got earnings coming out tomorrow. So that's information that you should know. That's on the chart for us to see when earnings are coming out. So that is something we would not want to participate in. Another one, earnings coming out tomorrow. And so as we go through these, we find what's showing relative strength. And here we go. And then multiple time frames. Look at the weekly chart. Look at that bottom. And so this is consolidating. It gapped down yesterday, influenced by the broader markets, and it's recovering right away. And what that communicates to us is that institutions could care less. It's cheaper than it was. They want to buy it. And that suggests it's likely going to break out. Is UPS bottoming? I know that was mentioned in the green room as well. And we know FedEx was bottoming. It has bottomed. Not is it bottoming? It has bottomed. It's a fact. Now, apply that to multiple time frames. The monthly, you can see the lower right is still in a downtrend. So that could raise the question, is it bottoming? But transitions occur in lower time frames. Back to that matrix that I showed you, going from downtrend to sideways is transitions. So you see the weekly chart has made a bottom. It's transition. It took months to do that, and it broke out several weeks ago. This pattern is what we call a 1, 2, 3, 4 hasn't occurred yet. It's got to trade above here. Look at the daily chart. It's got room to go up. This should be on your buy list. Let's see where it ends the day. Let's see what it does this week. And if it breaks out, then comes, okay, if I buy it, where's my stop loss? Doesn't guarantee it's going to work, but this tells me the odds are pretty darn good that this is going to go up. And the whole idea of what we're doing here is put the odds in our favor. Wouldn't you agree? This is how we do it with the top-down approach. So what's doing well today? As active traders, what's doing well on any given day? All I need to do is come in here and sort this. And this is only the S&P sectors. We could go to a layout. I could show you 140 sectors with subsectors, and then we could look at the stocks within it. And of course, that leads to a lot of reviewing, but these scans within the watch list guide us in the right direction. So what's doing well today? Materials. Well, it gapped up. All right. And it gapped up after yesterday's gap down, but it's short-term extended. We know that based on this number. And this was extension from the 20 MA. And again, we can just sort that if we wanted to, and so we could see if anything else is more extended. Well, actually, I had that scrolled up. Energy is the top performer. All green check marks. It's 7% above the 50, almost 6% above the 20. And as I look to the left, look at the weekly chart. That's coming up to a pretty stiff resistance area. I assume it's stiff because it's got a pivot high and it's got a pivot high. But could energy possibly be ready to break out to new all-time highs? This particular sector, there are others also. So what we would be looking for, and this is part of our approach to the markets and the different concepts of relative strength and relative weakness and money flows and bar by bar action. What should this do at that upper blue line, which we see is at these pivots? I put the line there based on the pivots. What should price action do? Price action is a reflection, as I told you, of what other traders are doing and what are their beliefs. So clearly, institutions believe that energy is the place to put money because it just started this advance. Look at the moving averages. So we use moving averages as a visual aid. Think about what it should do. If demand is strong and it's up at resistance where we know there are going to be sellers, it's likely to go sideways or pull back a very shallow amount. It's unlikely to do this. And look at what happened here on the weekly chart. As this moved up, it looked like it was coming up here and it collapses all the way back down to the lows. Maybe some news happened, probably, for something so extensive. But look at the monthly chart. Today's only the 21st. This bar is not done. We still got about 2 weeks to go. So we got to keep that concept in mind that this bar is not done. But if it closes like this and we've got a monthly wide range bar, that supports a bias that it should be able to go higher. Now, then we can go to the smaller time frame and look for entry patterns on a smaller time frame. And from there, we can go and look in here and see what's doing well in there. And what's doing well in there? Schlumberger, or SLB. This used to be called Schlumberger, right? Oil and gas equipment. That's already made a move up. Well, let's look at some others. Exxon already moved up. And these are probably going to keep going up, but we want pullbacks. Halliburton, this one usually does well. Earnings, reported earnings probably tonight after the close. See that E there? That means it's going to report earnings. If they weren't out already, that means it's going to happen after the close. You want to be aware of that. You want to look at this. You want something to tell you when the earnings are coming out so you don't get blindsided. And, they could come out and be terrible, or they could be good and it could gap down. Remember NVIDIA. Remember what Amazon did with great earnings when it went up and then it collapsed back down again. But again, we can look at what's strong, what's weak. Wide range bars is one of our favorites. Are there any wide range bars? Yes. Well, there's Schlumberger again. So this is where we can just begin to repeat the process of looking for what's strong and what's weak. Healthcare, all green check marks. What's strong? Are there any wide range bars? Yeah, but it's extended. What can I do? Well, I can put it on a watch list. Look at the monthly chart. This is bottomed. The bottom is in. It's consolidating. Right? This is the kind of patterns we're looking for. Pullback patterns, shallower pullback patterns. I can't do anything with, I can't chase it because, even though I believe it's likely to go up, it's just not the entry point that I'm looking for. This one needs to rebuild. It's damaged. Remember the major support concept. It broke out and it broke down under major support. So it's got to rebuild. It's a biotech. We like biotech ETFs, which have been done well last year and they've been consolidating. I'm not so sure what they're going to do because they've just been chopping sideways for a little while. There you go, Amgen. Now that's a biotech, but this is a company that's been around forever. It's called a drug manufacturer, but I know it as a biotech. This would be great for a credit spread if there was premium. I don't know, but it's easy enough to look. But this is, when we look at this for the weekly options trader, could there be premium down here at 323? Just go down here and I'd have to add more strikes. These are calls, but we want to put, so we just go and look at the puts. 320, nothing. Now, would we be willing to go out another week? This is the process. Something a no-brainer. Look at see the spread? They know this is going up, and that's a no-brainer. So the spread is ridiculous. This is like, hey, any of you idiots out there want to do business with the market maker? So this is part of what you need to know. That looks great. And so this is a pattern that should be shaping up. You mean Dow Chemical, BC? Or I guess you mean Dow Chemical. You're asking me if it bottomed. Well, based on what I said, what do you think? Bottoming, not yet done. Well, you have to define what is the transition. Remember what these are? These are pivots. This is lower highs and lower lows. It's a downtrend. Pivot low, support. Pivot low, support. It broke it. Pivot low, retest. Wide range bar down. It retraced back up again. 2 pivot lows, 2 pivot highs, forming it called the trading range. Comes back down again. This is where demand is. The pivots. This is the thought process. I believe there are going to be buyers down there. This is the 3rd time down there. Beliefs are not facts. And then we're looking for a candlestick, apply bar by bar analysis. A bottoming tail bar. That was a red bar and it turned into a bottoming tail bar. Institutions were buying down here, or anybody looking at the chart, but not anybody can drive it back up again. Not anybody can create a wide range bar off of the low, but it's coming up to resistance now for the 3rd time. If it breaks out above those pivot highs, it's made a bottom. Black and white. It's a fact. It's no longer a belief. The next question is, where's the next reference point of resistance that is likely to stop at? Where are the sellers going to be? Now, you don't need fib lines. You don't need VWAPs. You don't need anything proprietary. All you need to be able to do is open your eyes and look to the left. That's where the highs are. This has room to go up. The monthly chart has bottomed out. Bottoming tail, bottoming tail, bottoming tail. Wide range bar up. It's not done. It's consolidating. Now, maybe, right? Maybes mean I'm not sure what it's going to do. This isn't it's an actionable pattern, but you'd have to give it a whole lot of room. We look for patterns, whether it's in the green room or one of the letters that we believe are actionable, meaning it's time to press the button now. And it gives us a place to put a stop loss. So there are times when you get a lower high, lower low. This is where your support is, right? We have minor support. I explained to you what major support was. So if this was to come down here and take one of these bottoming tail bars, and we get one of them here, some bottoming tail bar, which could be preceded by a down bar where it's in an uptrend and it has bottomed, is a buy setup. That is a trading plan. That's rules, meaning if something has bottomed out and now the daily chart is in an uptrend, and in this case, it's above all the moving averages, right? It's cleared all the moving averages. Let me clear my messy there. That tells me I now have a bias. I have a bias that I should buy Dow Chemical. Now, when are you going to buy it? When there's a pattern that tells me to buy it. Now, could I buy it now? I could. And I could say, you know what? Whatever is going to happen here, I think it's a higher probability that it's going to be noise. And I believe it's going to come up here, which isn't all that far away. So what if I was to buy this here, and because of these converging moving averages in alignment with this congestion and minor support area, I'm going to share size it down here, meaning I'm not going to go all in, or if I did go all in, and all of these are choices, right? How you want to do your position in money management. But if I share size it down here and I say, look, I'm willing to risk $300, $100, whatever it is for you. I'm willing to risk that. And I share size it. I buy enough shares that if it goes down there, that's how much money I'm going to lose. This takes us back to the psychology part of trading. You can operate in an environment where you can never know the future with ultimate certainty. And it frees your brain from all those what if thoughts. Now, I think if we wait here, we're going to get a better opportunity to buy this stock, right? But if it reaches a point, or you reach a point to say, you know what, I just want it, and I'm going to buy something. And you could say, you know what, I'm just going to buy 5 shares or 2 shares, and I'm going to put it in my minder and keep an eye on that because I don't want to miss it. But of course, you could just do something like this, right? You just say, you know what, I'm going to set an alert for the next week, and I could even put a note in there as to what I'm thinking at the time. And I can set an alert up at the high and say, you know what if it just pops up there? Say, maybe, I can type. I can't, hitting the wrong button. Take out question mark. So when it goes off, my note's going to be there because I may not remember. And I could have set that for a month, which it shouldn't take that long. Is it in a strong sector now? Well, it's in the materials sector. Is the materials sector strong, BC? You go back and you look at the list. There it is. It is in a strong sector. So money is flowing into that sector. And is Dow in that sector? XBI. Why isn't this covering all of them? Company Dow. It should be, right? It should just highlight there. There it is. It's in the chemicals. I think it's in XBI. In any event, it's in a sector that's being bought right now. And we can do the opposite. You want to know what's weak? Just sort it the other way. Consumer staples are weak today, but it's only down 0.5%. So it's not that weak. And then on the weak, what's the weakest and the strongest? Well, the weakest is technology. So this whole AI bubble theme is still in play, right? And again, we could start looking at semiconductors. So within technology, semiconductors are still doing well. And look at this, broke out this week out of a bottom. Can you see how we're repeat the same things? And this is what we're going to do. When we come back in 2 weeks, we're going to see what's happening in the broader markets now, and we're going to look for opportunities for what to buy and what to sell in the same top-down approach to where money is flowing into and where money is flowing out of. And we know technology isn't doing well, but if we said, well, what is doing the worst in there? I could just sort this like that, and I can find what's doing bad. Apple is doing the worst right now, among the worst. So if you're a, Apple user, you got your phone and their iPad and you own the stock and so on and so forth, it's going to get cheaper. Maybe the 200 MA, maybe down here, but institutions will come back for Apple again. It's going to report earnings at the end of the month. That's going to be a big deal. But look at that rounding top. Look at the weekly. There's no pivots here, which means it was in a very, very strong trend. The monthly is rolled over. I don't have time to explain it, but we have another concept called creating support. Because once you create a belief about something, in this case, this is going lower, you need other rules that will shift your bias at the appropriate time. So with that being said, I hope you enjoyed this. It was very different from our prior MT Lives, which more focused on a concept. This is more of our top-down approach, looking for where the money is flowing into and out of, and what's happening in the broader markets. And you're welcome to email Dan and I with feedback. Thank you, Val. And yeah, we'll do it again in a couple of weeks. And consider that, this is part of the advisory letter. It's a great service with trades and market analysis and videos. And so absolutely check it out. and we'll be talking again in a couple of weeks. Bye bye.